My name is Muhammad Abi bin Azman. My matrix ID 2019265522. I am the CEO of MAXIS Berhad.
My name is Muhammad Izzat bin Abdul Razak. Matrix number 2019250346. I am Financial Manager 1.
My name is Muhammad Syafiq Haikal. My matrix number is 2019446914. My role in this company as the second financial manager.
My name is Adam bin Hussein, matrix number 2019442136. I am the financial institution.
My name is Muhammad Haris bin Muhammad Noor, and my matric card number is 2019438126, and I am shareholders.
Assalamualaikum and a very good morning to my fellow members. First of all, thank you everyone for taking the time to join this group meeting. Your times and sacrifice are very much appreciated. If you guys don't mind, I want to check on you guys. Our financial manager, Izzat and Shafiq, how are you guys doing?
We are doing good.
Yeah, I'm doing good too.
Okay, thank you for checking, boss.
Okay, you're welcome, Izzat. How about our financial institution and shareholder, Adam and Haikal? Are you guys with us?
Yes, boss. I'm here, boss. Thank you.
Me too. Everything doing just fine.
Alhamdulillah, such a pleasure to hear you guys are doing great. With that, I would like to start this discussion as quick as possible. I wanted to propose, as the CEO of MAXIS Berhad, I want to propose on making a loan with an amount of RM 100 million, long-term loan with a particular bank, which is our Bank Islam Berhad. First of all, loan of 5 million to pay MAXIS Berhad current liabilities, which is payable and accrual, which part of short-term liabilities for the current year. The second one is balance of 95 million for MAXIS Berhad invest on opening a lot of new branches. The loan that I'm proposing is a long-term loan borrowed for the next 10 years. I believe an RM 100 million loan in the long term will do it. RM 5 million from the loan will be used to ease all of our short-term debt. With that being said, we will record less debt for a particular year. This situation helps us lower our liability and convince most banks of our loan deal. Meanwhile, the rest of the loan will be invested in new branches. For an obvious reason, these branches can help us boost this company. In terms of sale, we have a higher possibility to record a better profit. Based from our report, do you guys think we can actually make this work?
I think I will take it from here, boss. From my report, our performance from year 2019 to 2020 seems a little bit complicated. As we can see, from in the term of liquidity ratio, our company showed a positive run and improvement from year to year. But unlike the efficiency ratio, efficiency performance, they are sort of a test. There's a poor and a bad performance. So I will analyze this from the above report. If we look at our liquidity performance, what I can say, as we move from the year 2019 to 2020, we have more ability to pay off our short-term obligations. We also own more assets that can be converted to cash. And not to forget, we have more financial resources to fulfill our short-term obligation. Moving on to our performance in efficiency, our efficiency in collecting our receivable account seems there to be a drop from the year 2019 to 2020. We are also less effective at generating sales We are also less effective at generating sales from the year 2019 to 2020. However, we show a good improvement at generating sales from our current assets in 2020 compared to 2019. Last but not least, in terms of generating cash from our overall asset, our performance has dropped compared to the previous year. I think Shafiq will then take our comparative analysis.
Okay, first of all, for our comparative analysis, I am as the second financial manager, and my responsibility acts in ensuring the company competitive to compete with other company within the same industry with us. For example, like DG Berhad and Selcom Berhad. Okay, for the comparison that I make, for first of all, according to the comparison I conduct for 2020, the current ratio value for the MAXIS is 0.63, while the current ratio for the DG is 0.61. And MAXIS and DG quick ratio is 0.163 and 0.55 respectively. And that for the quick ratio. And last, for the networking capital for MAXIS in 2020 is negative 1,639, while for DG is 108.83. That is for the liquidity ratio. For the leverage ratio, MAXIS and DG have a debt ratio will be 0.45 and 1.7 respectively in 2020. And then MAXIS has debt to equity ratio of 1.38, while DG has a ratio of 0.12. And last, leverage ratio calculation in time interest earned for MAXIS is negative 6.18, and time interest earned for DG is 7.41. And then for the efficiency ratio, the average collection period for the MAXIS is 160.9 for MAXIS, and then for the DG is 35. And same goes to the inventory turnover, which is 2.16 and 2.62 respectively. And for fixed asset turnover and total asset turnover is 1.82 for MAXIS in 2020, and for DG is 24.27. That's for the profit. That's for efficiency ratio. And last, for the crucial part is profitability ratio for MAXIS in 2020. Show a gain of 55.65%. For MAXIS, and for DG is 74.6%. And then operating profit margin is 28.04 and 41.5 for MAXIS and DG respectively. And last, for overall profitability ratio is a net profit margin for MAXIS is 15.41%, and for DG is 19.8%. That is comparison for the 2020 performance for the both company. And for me, that is for overall in comparison for MAXIS and DG. For me is DG have a better performance in the business than from MAXIS. So that's all for my part.
Thank you, Shafiq, for your information. Adam and Haikal, are you guys here? Shall we continue our discussion?
Yes, boss, don't worry. I'm still here and I will continue the discussion. For our ratios analysis and summary for year 2020 and 2019, based on trend analysis, MAXIS Berhad performance under leverage ratio are significantly worse in 2020 than it was in 2019. As we can see, the debt ratio is increasing in value. So a debt ratio is a statistic that compares total debt to total assets to determine a company's liability. The increase in value means that the MAXIS Berhad is suffering financial difficulties. Next, MAXIS Berhad's debt to equity ratio, DER, has surpassed the mark of 1, indicating a poor performance. It demonstrates that the corporation has more debt than assets. Finally, the amount of times interest earned will be significantly lower in 2020 rather than in 2019. As we all know, time of interest is used to determine a company's liability to meet its debt commitment based on current income. As a result, when MAXIS Berhad's times of interest falls or decreasing, it indicates that the company is in trouble, as the lower the ratio, the lesser the company's capabilities and the higher the chance of default on its debts.
I think it's about my turn now. I would like to present about MAXIS performance. Based on trend analysis, MAXIS performance under profitability ratio is very good in 2020 compared to 2019. For all profitability ratio, the trend is upward. The gross profit margin increased by 4.17% from 52.48% in 2019 to 56.65% in 2020, indicating that sales in 2020 will be higher than in 2019. This company's operating profit margin increased 0.74% from 27.30% to 28.04%. It demonstrates that the company is efficiently converting sales into profit. This company net profit margin fell 0.90% from 16.31% to 50.41%. This suggests the corporation is losing money per ringgit of sales. The return on total assets falls by approximately 0.33%. The current ROA is 6.37%, whereas the preceding ROA was 6.70%. It suggests that the company may have over-invested in assets that have failed to generate revenue growth, putting the company in jeopardy. This company's return on common equity increased by 0.05% from 19.55% in 2019 to 19.60% in 2020. Okay, that's all from me, boss.
Thank you for all the report. I now would like to know how are you feeling after seeing those reports. Any of you guys like to volunteer?
I'm glad you say so, boss. I now would like to point out my ideas. From my observation, the first thing, we need to get rid of the average collecting period. And for obvious reason, I think the best way to do it is to give discount to our receivable for the early payments. Next up, I would like to point out our inventory turnover performance. It seems to be a bit worrying, but I have figured out some ways that we can overcome this problem. My solution I have come up with to improve our sales. Improving sales can be done in many ways, in terms of marketing, pricing, managing our stocks. All this aspect can technically improve our sales. Improving sales will also improve our inventory turnover ratio. Last but not least, I would like to point out my very last idea, our performance on total asset turnover. This performance is pretty much related to the previous two performance. If we can improve the previous two performance, this performance will automatically look good and better on the sheets. So with that being said, we need to focus on the previous two, which is increasing our sales and also give discount to our receivable for every early payments they make. If this being made, I think our ratio and both efficiency and liquidity ratio will look very good from year to year.
Okay. Good idea, Izzat. Anyone else?
Boss, if you don't mind,
Yes, please, Shafiq.
I will go to the base in my report, which is I will highlight to the efficiency ratio, which is we have a bad performance in efficiency ratio as well as profitability ratio. But I will go first to the efficiency ratio. In my comparison, our company, which is MAXIS Berhad, make a more revenue than the DG company. Case we have made a revenue in 2020 for the 8,900,000, but for the DG they just generate a revenue for the 6 million only. So but for the efficiency ratio performance, MAXIS have a greater performance from us. So I think by focus more on the efficiency ratio, on how to turn our asset to the profitability is more important for our company. And then for the profitability ratio performance, this will make sure our company to meet our requirement to pay the short-term commitment, which is short-term liabilities, and due for the bad profitability ratio, I will suggest the one option only, which is we must obtaining a bank loan. That first step for resolving our debt management, and then from that we can increase our asset turnover, and yeah, that will make our company survive and make a long survival in the market. That's all for me.
Boss, can I have some words?
Me too. After you, Adam.
Okay, thanks Haikal. Okay, so as a financial institution for MAXIS Berhad from Bank Islam Berhad, I find it very difficult to evaluate whether or not to approve the loan application based on all of the leverage ratio data that I have just presented before, because as you can see, the leverage ratio was not in a good shape. So I have been personal with the CEO, Nabil. I questioned the CEO on how they plan to handle all the debt while taking out a large loan, and how they plan to repay the loan with such a poor profit margin. It appears that the CEO already has a plan in place to use the loan to handle all of the existing debt and operating expense. So the CEO said that they intend to apply for 100 million ringgit for a 10-year loan and pay off all their existing debt. And the CEO believes that the long-term loan of 100 million contains of a total of 100 million will be enough. For the loan of total RM 5 million would be utilized to pay off all of their short-term debt. This position enables them to reduce their liabilities and convince most banks to approve their loan. Meanwhile, the remaining of the loan with the total of 95 million ringgit will be used to open a lot of new branch. So these branches can help MAXIS Berhad grow the organization for numerous reasons, but for the obvious reason is to gain a lot of profit, and I believe so they will do gain a lot of profit. That's all from me.
Okay, I think from a report, gross profit margin is a good performance because the gross profit in 2019 is lower than 2020. It shows that the company earn more money for each product sold in 2020 compared to the previous year. Okay, next we go to operating profit margin. For performance for operating profit margin is good because the operating profit in 2020 is higher than 2019. For 2019, the cost of operation before interest and tax is 27.70% of sales in ringgit. It suggests that the cost of operation before interest and tax is 71.96% for each ringgit of sales in 2020. Okay, next we go to net profit margin. performance for net profit margin is bad because for 2019, the company generates approximately RM 0.1631 in net earnings or earnings accessible to shareholders for every ringgit of sales. For 2020, the company is able to create net profit or earnings accessible to shareholders of RM 0.1541 for every ringgit of sales. Next, we go to return on assets. The performance for return on asset is bad because for 2019, it revealed that the company can produce net earnings of RM 0.0670 for every RM ringgit invested in its assets. It suggests that the company can create net earning of RM 0.0637 for every RM ringgit invested in its asset in 2020. And lastly, for return on equity, performance is good because the company returns on equity increases by around 0.05% from 19.55% in 2019 to 19.60% in 2020. It reveals that the company's ability to generate profits and increase shareholder value is deteriorating. Okay, that's all from me, boss.
It seems like we all have a good idea of how our company did. If you guys don't mind, I would like to come out with one solution of how can we improve our performance. How do you guys think?
If you ask me, your purpose to make a loan is very much needed. As I mentioned earlier, to improve our performance in inventory turnover ratio, we need to improve our sales. And as you mentioned in the purpose, 95 million from the 100 million will be used to invest on new branches. Yes, boss?
Yes,
Yes,
So I
that's
think
correct.
the best decision is to make the loan.
Yes, for sure. 100% I agree with Izzat for the solution. The reason is if we go to the financial flow analysis, that's reveal the MAXIS performance in terms of liquidity, leverage, and efficiency is much worse than DG performance. This is due to our inability to achieve a short-term commitment, while the worst thing in performance is on the profitability. It does so because our company sales and productivity are so bad. It's enabled our competitor to outperform our company while being in debt, and the loan is still being paid. But for sure, we must make a loan to generate more performance in the future. That's all.
I also agree with Izzat, which suggests to make the loan because for starters, it's because of how the MAXIS Berhad intend to handle all of their debt by paying off their previous debt, leaving them with nothing but only to pay the loan. Following that, I believe that they will profit more over the next 10 years because the companies are so large and well known by all of the world. I believe it will be relatively simple for them to expand faster with more new branches in plan to gain more revenues and profit. And lastly, the reason I approve the loan application is because I want to keep the relationship between the company as MAXIS Berhad has been associated with Bank Islam Berhad for a very long time. I believe the company will do well in handling all the problems and manage to pay back the loan. That's all.
I agree with Izzat too because I am satisfied with the returns and dividend payment offered by the company. It is because I invest in the company with a modest investment, so I don't feel affected by the returns and dividend they offer me. For me, I will continue to invest in the company. This is because the plan for the coming year is to innovate on MAXIS plan products. Okay, that's all, boss.
All right, thank you for all the discussion we have made today. Hope to see you in another hope to see you in another meeting. Meeting dismissed.
Thank you, boss.